Every trader faces a universal challenge: fear. Fear of losing money, fear of making the wrong decision, or even fear of missing out on the next big opportunity. It's natural. Fear is an inevitable part of trading, but here's the truth: fear doesn't have to control you. In fact, fear can be the thing that helps you grow as a trader, as long as you learn how to handle it. Let me take you back to a moment in my trading journey. It was a few years ago, and I'd just started taking trading seriously. I had my strategy in place, I had the right tools, and I was ready to make a move in the markets. I thought I had it all figured out. But there was something I wasn't ready for: the emotional roller coaster of trading. I remember one particular day sitting in front of my computer, staring at a trade I had entered. At first, everything looked great. My setup was perfect. But suddenly, the market moved against me. I watched as my position slowly started to bleed red. Fear kicked in. I felt that rush of panic, that feeling in the pit of my stomach that told me I needed to do something. My mind raced. Should I close the position, move my stop loss, or should I just wait it out and see if the market turned back around? In that moment, my trading plan didn't matter anymore. My emotions, namely fear, took over. I found myself changing my strategy on the fly. I was no longer trading with a clear head. I was letting fear drive my decisions. The result? A bigger loss than I had originally planned for. Does this sound familiar to you? Have you ever had a moment where fear took control of your trades? Have you ever let emotions guide you into decisions that weren't aligned with your strategy? Fear is powerful. It can make you do things you never thought you would, and it can quickly turn your perfectly planned trades into emotional chaos. But here's the thing: fear doesn't have to control you. You don't need to let it dictate your decisions. In this video, I'm going to teach you how to master fear and how to separate your emotions from your trading. I'll show you how to handle fear with a clear, focused mind, and how to stay grounded even when the market seems to be going against you. Because let me tell you this, it's not the fear itself that will stop you. It's how you react to it. Now, I want to check in with you. Have you ever been in a situation where fear influenced your trading decisions? If so, leave a quick comment below saying, "I've been there, so I know we're on the same page." By the end of this series, you will have practical tools and strategies to recognize fear when it comes up, deal with it effectively, and ultimately make smarter decisions in your trades. But first, let's dive deeper into why fear affects us so strongly as traders and how we can start to control it instead of letting it control us. Now let's take a deeper dive into why fear is so prevalent in the first place. Understanding why fear exists in trading will help you accept it, manage it, and ultimately master it. Why does fear affect traders? It might seem obvious to some, but fear is a natural response to loss. The mere thought of losing money can trigger a sense of danger, and for good reason. Psychologically, we're wired to avoid loss. We're not just talking about financial loss here. This goes back to human survival instincts. Fear is part of the fight or flight response. When you're faced with the prospect of losing, your brain interprets it as a threat to your well-being. The ancient part of our brain, the amygdala, is responsible for processing fear. In the context of trading, the amygdala reacts when the market moves against you or when your position is in a loss. That rush of fear is your body's instinctive response to loss, but here's the catch. The financial markets are designed to trigger this response. If you've ever seen the market start to swing wildly, you can almost feel the tension in the air. It's a battle between bulls and bears, and that uncertainty, that volatility, can trigger that primal fear response. But here's the most important thing. It's not the fear that's the problem. It's what you do with it. This is where trading psychology comes in. Every time fear arises, you can either react to it impulsively or respond to it with awareness and discipline. Let me share a quick story about Maria, a trader I met a while ago. Maria had been doing great for a few months, making small, steady profits. She was following her strategy, using proper risk management, and staying patient. Then, one day, the market did something unexpected. It shifted rapidly, and Maria's previously safe position started turning into a losing trade. Her immediate response? Panic. She saw her account balance shrinking and the loss mounting. The fear of losing even more overtook her, and instead of sticking to her stop loss, she adjusted it, giving the market more room to move. Maria was hoping the market would turn around, but deep down, she knew she was risking more than she was comfortable with. When the market didn't reverse, she closed the position at a bigger loss than she initially planned. Maria was in a dangerous cycle. Her fear led to impulsive decisions, and those impulsive decisions only made the situation worse. This story highlights a common psychological trap that many traders fall into. The fear of losing more becomes more damaging than the initial loss itself. The truth is, fear of loss is inevitable. You cannot escape it. It's human nature, but what you can control is how you respond to it. The problem with fear. Impulsive decisions. Fear in trading often leads to impulsive decisions. When you start reacting out of fear, you stop thinking logically and start making decisions based on emotions. This is when fear-driven decisions like moving your stop loss, overtrading, or chasing trades become common. Let's talk about moving your stop loss. How many times have you done this or seen someone do this? When fear takes over, traders might tell themselves, if I just give it a little more room, it'll come back. This is exactly the kind of thinking that impairs your risk management and sets you up for even greater losses. The impulse to overtrade is another issue that arises from fear. When you're afraid of losing or afraid of missing out, you might place unnecessary trades that don't align with your plan. Instead of waiting for the right opportunity, you might trade out of frustration or to make up for a previous loss. This kind of chasing trades with emotion is dangerous. It leads to poor decision-making and bigger drawdowns. The reality is that fear often leads to poor judgment, and poor judgment leads to lost opportunities or even blown accounts. Fear and the fear of missing out, FOMO. Let's talk about another form of fear, the fear of missing out, FOMO. It's something every trader has experienced. You see the market moving in a direction and you haven't entered a trade. You start to think, what if I miss the chance? What if the market moves up without me? This feeling of urgency can push you to make a trade when you shouldn't. You get caught up in the market's movement instead of waiting for the trade that fits your strategy. But here's the thing. FOMO is a trap. It causes you to chase trades and enter markets that don't fit your plan, simply because you feel like you're missing out. The problem is, chasing trades without following your strategy rarely leads to success. More often than not, it leads to losses. Let me share an example from my own experience. I remember one particular day where I watched the market rise sharply, and I felt like I had to get in. There was no setup, no pattern, no plan, just fear of missing out. So, I entered the market hoping to catch the move, but soon enough, the market reversed, and I was left with a loss. The loss wasn't the problem. The problem was that I had entered the market out of emotion, not strategy. FOMO blinds you to the reality that the market will always offer new opportunities. If you don't take this one, there will be others. The key is learning to wait for your perfect setup, the one that fits your strategy, and not trading just because you feel like you're missing out. Fear of losing and the psychological damage. So we've established that fear is natural, but it's how you handle fear that matters most. When fear leads to impulsive trading, poor risk management, or FOMO, it can do serious damage to your account and your confidence. Fear starts to create a psychological spiral that's hard to break. The more you lose to fear, the more your confidence takes a hit. Each loss feels like it's reinforcing the idea that you're not cut out for trading. You start doubting yourself and your strategy. And when fear becomes entrenched in your trading, it can become a self-fulfilling prophecy. The more fear you feel, the worse your decisions get, and the more your losses mount. The cycle of emotional destruction continues, and you find yourself stuck in a downward spiral. But here's the key. You can break the cycle. Fear doesn't have to be a barrier. Instead, you can start using fear as a motivator to improve your emotional control and decision-making. At this point, let's check in with you. Have you experienced fear in your trading? Maybe you've made decisions based on fear or FOMO before. Let me know in the comments. Have you ever let fear influence your trading decisions? If so, just say, "I've been there, so I know we're all on the same page." Now that we've explored why fear is so powerful in trading and how it influences our decisions, the next step is to manage and overcome it. Fear doesn't have to control you. In fact, with the right techniques, you can transform fear from a paralyzing force into a source of strength that helps you become a more disciplined, patient, and confident trader. Let's dive into some strategies that can help you manage your fear and keep it from driving your decisions. 1. Develop a solid trading plan. The first and most important step to managing fear in trading is having a solid trading plan. Fear often arises when there's uncertainty or a lack of structure. If you don't have a clear plan, you're more likely to be swayed by your emotions when the market moves against you. A well-thought-out trading plan helps you stick to a rational strategy even when fear creeps in. A trading plan includes entry and exit rules. These should be clearly defined so that you know exactly when to enter and exit a trade, regardless of how the market is moving. Risk management. Decide in advance how much you're willing to risk per trade. Typically, this is no more than 1 to 2% of your trading capital. Position sizing. Define how much capital you'll allocate to each trade based on your risk tolerance and the potential reward. Stop losses and take profits. These levels should be set before you enter the trade. Having these boundaries in place removes the need to make emotional decisions mid-trade. A strong trading plan reduces fear because it gives you structure and certainty. When the market starts moving in unpredictable ways, you can rely on your plan to guide your decisions. Let's take the example of David, a trader I've worked with who had been struggling with fear. Every time he saw the market move against him, he panicked. But after working together, we developed a trading plan with clear entry and exit rules and defined risk management. David started to feel more confident because he knew exactly what to do in every situation. His fear decreased and he started following his plan with more discipline. 2. Accept losses as part of the game. Losses are inevitable. This is something every trader must accept. Fear of loss often comes from the belief that every trade should be a winner. But here's the reality: no strategy wins 100% of the time. There will always be losses, and that's okay. The key is to understand that losses are part of the process. They're not a reflection of your ability, and they don't define you as a trader. Accepting losses as a natural part of trading helps to take the emotional sting out of them. When you can accept that losses will happen and learn from them, you'll start to approach them with mental resilience. For instance, I once worked with Anna, a trader who would freeze up whenever she hit a losing streak. She felt defeated and would try to revenge trade, entering trades out of frustration, hoping to make back her losses. The problem was that this behavior only worsened her fear. We worked on adjusting her mindset. Instead of focusing on the loss, we reframed it as a learning opportunity. Now, when she hits a loss, she checks her trade to see what she can improve next time, and her fear diminishes. 3. Use a fear checklist. One effective way to separate fear from your trading decisions is by creating a fear checklist. When you feel fear creeping in, whether it's from entering a trade, holding a position, or even watching the market move against you, use the checklist to ground yourself and reaffirm your plan. Here's how you can create a simple fear checklist. Is this trade part of my plan? If you're entering a trade out of fear or excitement, it's time to step back and reassess. Only take trades that fit your strategy. Have I set my stop loss? Ensure that your risk management is in place before you enter any trade. This takes the fear of losing too much off the table. What is the risk-reward ratio of this trade? Are the potential rewards worth the risk? Be objective about the math, not the emotional pull. Am I trading out of fear or FOMO? If you're feeling impatient or rushed, this could be a sign that emotions are taking over. Take a moment to recenter yourself. Using this checklist allows you to pause, step back, and evaluate the situation logically rather than emotionally. Over time, this becomes a habit that helps you trade with a calmer, clearer mind. 4. Mindfulness and breathing techniques. In times of high emotional stress, your body's natural response is often to breathe shallowly and to feel your heart rate increase. This physiological response is a sign of fear taking over. One of the best ways to manage this is by practicing mindfulness and breathing exercises. Here's a simple breathing technique you can use to calm yourself during emotionally charged moments in trading. Inhale deeply through your nose for a count of 4 seconds. Hold your breath for 4 seconds. Exhale slowly through your mouth for a count of 6 to 8 seconds. Repeat this for 5-10 cycles. By focusing on your breathing, you slow down your heart rate, reduce the impact of your emotional responses, and return to a more balanced state of mind. This technique helps you stay present and grounded, which is essential when managing fear during a trade. Mindfulness allows you to detach from the emotional noise and refocus on your strategy. 5. Build confidence through small wins. Another powerful way to manage fear is to build your confidence slowly. The more experience you gain, the more you'll trust your system and your ability to handle uncertainty. Confidence is built through small wins, and the more small, consistent successes you have, the more confident you'll feel when the fear inevitably arises. Start with smaller positions if fear is overwhelming you. The idea is to gain experience without risking large sums of money until you feel more comfortable. With time, you'll feel less fear with larger positions, and your confidence will grow. Let me share the story of Jake, a trader who struggled with confidence. Every time he placed a trade, he was terrified of losing. So we started with smaller positions, trading a fraction of his normal size. With each win, his confidence grew. Over time, he started trading larger sizes, and his fear diminished as he trusted his strategy and his plan more. Now, I want to ask you, have you tried any of these strategies to manage fear in your own trading? If any of these techniques resonated with you, let me know in the comments by saying, "I'm ready to take control of my fear," so I can see how you're engaging with the content. We've covered a lot in the previous parts, from understanding why fear is an inevitable part of trading, to strategies that help manage that fear, to the power of consistency and patience in building a winning mindset. Now, let's focus on how to implement all of these strategies into your daily trading routine so you can start seeing real results. The key is to make these strategies part of your trading lifestyle so that fear no longer holds you back from making sound, disciplined decisions. Creating your actionable daily routine. To be successful in trading, you need a clear, structured routine. It's easy to get caught up in the chaos of the market, but the most successful traders know that having a daily routine is essential to staying grounded. Your routine serves as your anchor, helping you to stay focused, consistent, and in control of your emotions. Here's how you can implement your strategies for fear management, consistency, and patience into your daily routine. Start the day with a clear mindset. Before you even open your trading platform, take a few moments to set your intentions for the day. How do you want to approach the market today? Focus on mental clarity. Are you trading out of excitement, fear, or are you trading because you see a real high-quality setup according to your plan? Take a few minutes each morning to practice mindfulness, deep breathing, or even a brief meditation session to clear your mind. This small routine will help you enter the market with emotional balance rather than allowing outside factors to dictate your trading. Follow your predefined trading plan. One of the main reasons fear gets the best of traders is when they don't have a solid plan in place. The key to managing fear is to stick to your predefined trading rules, always. Before you even think about making a trade, make sure your strategy aligns with your entry and exit criteria, risk management rules, and trade size. Having these elements in place means you won't have to second-guess yourself when emotions start to creep in. Create a checklist before every trade. Ask yourself, is this trade part of my plan? Am I sticking to my risk management rules? Have I defined my stop-loss and target in advance? If the answer to any of these questions is no, don't take the trade. This checklist will keep you consistent and focused, regardless of how the market is moving. Daily trade review and emotional check-in. At the end of each day, take time to review every trade you made, whether it was a win or a loss. This is where the power of journaling comes in. Review your trades and your emotional state during the day. What were you feeling when you entered each trade? Were you calm and collected? Or were you trading out of fear or excitement? This is your opportunity to learn from each experience. The more you reflect on your emotions and trading decisions, the better you'll become at identifying emotional patterns that affect your decision-making. Over time, this will help you build emotional awareness and make better decisions in the future. Set time limits for trading. Another key part of staying disciplined is knowing when to stop. Fear often arises when traders feel like they have to keep trading, even when the market isn't offering good opportunities. This often leads to overtrading, a dangerous cycle that can drain your capital and increase emotional stress. Set a time limit for how long you'll trade each day. This helps you avoid making impulsive decisions when the market is not giving you the setups you need. For example, you might decide that you'll only trade for 2 hours each day. Once that time is up, close your platform. This simple rule prevents emotional exhaustion and ensures that you're not making impulsive decisions just because you feel like you need to be doing something. Focus on long-term results, not short-term wins. The biggest mental shift you can make as a trader is to focus on long-term results instead of short-term wins. Fear is often rooted in the desire for immediate gratification, but true success in trading is about compounding your wins over time. Every trade you take is part of a bigger picture. You might not hit it out of the park every single time, but small, consistent wins over time add up. If you can stay patient, stick to your strategy, and focus on long-term growth, you'll build the emotional resilience needed to stay consistent even when things get tough. Remember, it's not the one trade that matters, it's the sum of your trades. By sticking to your plan and managing your fear, you'll continue to grow as a trader. Building emotional resilience. Now, let's dive into the importance of emotional resilience. As a trader, you'll face losses, market downturns, and bad trades. It's all part of the journey. The key to long-term success is how you bounce back from those losses. Emotional resilience means not letting losses define you. It's about accepting losses as part of the process and moving forward without carrying the weight of failure. It's the ability to take a hit, learn from it, and keep moving without letting fear, doubt, or frustration take over. This is where patience comes in again. The more patient you are with the process, the easier it becomes to accept losses and learn from them. When you understand that losses are part of the journey, you stop seeing them as personal failures. Instead, you see them as valuable lessons that contribute to your growth as a trader. Creating your routine. Consistency, patience, and confidence. Let's tie everything together. Your goal is to create a routine that supports emotional control, patience, and consistency. Every part of your routine, from reviewing your trades to managing your time, should support your ultimate goal, making rational, fear-free decisions. Consistency in your routine will help you stay grounded. Patience will help you wait for the right opportunities, and confidence will allow you to trust your plan and your strategy, even when the market doesn't go in your favor. Before we finish up, I want to know, have you created a routine to manage your trading fears? If you're ready to take control of your trading routine, drop a comment below saying, "I'm ready for consistency," so I know you're committed to implementing these strategies. This is your final step in mastering fear in trading, implementing the habits and mindset that will carry you through both the wins and the losses. You'll become a more resilient, disciplined, and confident trader over time. Mastering fear in trading isn't about eliminating fear completely. It's about managing it, responding to it logically, and using it to your advantage. By developing a consistent routine, trusting your strategy, and building emotional resilience, you can create a trading life that's based on calmness, discipline, and long-term growth. Remember, the most successful traders aren't those who make the biggest trades. They're the ones who stay in the game, follow their plan, and embrace the process. And that's how you overcome fear and become the best version of yourself as a trader.